Hi, my name's Scott Dahl. Thank you for tuning in to another one of my podcasts. It looks like to me we might have an intermediate top or a change in trend. That's why I'm putting this podcast up. So if you recall, after the April bottom and the significant rally, the V-shaped recovery that people said could never happen without a recession preceding it, well, it's happened. And it looked like to me it was bullish on the way up. And what I identified is what's called a continuation pattern, which is a flag. I'm going to show you that flag one more time. And the reason I'm going to show you this is because what we've got now is a classic broadening top. I'm not saying that the market's going to go down, but I think the probability is that we're going to see some form of a sell-off. I could be wrong. I don't necessarily hope that I'm wrong, because you've got to understand that when these markets rally and they rally strong, you've got to have a corrective phase in order for it to regroup and to be able to move higher. And that's what we're probably going to see here. That's what the April sell-off was. I don't know what caused that April sell-off, the tariffs. Probably, but it doesn't matter. What matters is it was a correction. I always said it was a correction, and the correction, what it did is refresh the market, and we went up to new all-time highs, and I gave you targets on the way up of where I thought we were going to go. So these targets were shown to me on the chart by the use of the flag. So let's take a look at the flag and one more time, and then I want to show you what I'm looking at, which is called a broadening top, which is an entirely different formation. The flag is a continuation pattern. The broadening top is a topping. What its name implies, it's a topping pattern. So what we have up is flag. I've identified those. I'm going to show them to you again on the chart of the S&P 500. So the ordinary pattern is we're going higher. This is the mark going higher. Then we stop and we coil in this pattern. We go up and down in this flagging pattern, and then the odds of probability is we go break out to the upside and we continue higher. So let's take a look at the S&P 500, and I want to identify these flags again. So here you have the S&P 500. You have stem, a pull, so to speak, and then you have the flags. You have one flag here. You have one flag here. So these are counter trend moves. You have another flag here. So you have 1, 2, 3 flags on the upside. Remember, I mentioned last time that when we create these price gaps, as we're moving higher, as we're creating these continuation patterns, that's bullish as well. So I had this last flag. I had a target of 6,807. We're at 6,315, and we're trading today. It's August 7th. It is actually 12 noon Pacific time. So I'm going to say that this flag gives us not the guarantee, but the probability that we're moving higher. Down here, this 6,570, that's a target that was created from what is called the head and shoulders bottom. I don't want to detail that because I want to get to the elephant in the room, this potential top. But I'm going to say that we've got a target off this bottom and off this flag somewhere between the 6570 to the 6807 range. However, what we've got now is we've got a topping pattern, which is, again, called a broadening top. Usually you see a broadening top after a significant up move, which we've had. Also, the broadening top would signify a major top. Now, when I say major top, that means if this is a top, we don't know yet, but if it is, then we could see a sell-off or at the very least a sideways market for a month or two. Also, it's important to point out that we're in a very seasonally weak period. August and September are typically the weakest months of the year. Also, the August is the weakest month of the first year of the presidential cycle. So we have weak seasonality that's holding this market down. So with the broadening top, what you have is these kind of lines here. So these moves and inside this pattern, and typically you have 5, but you can have more. And then we break through the bottom and we go down. Here it is live. So you've got a broadening top formation. We put the peak in here, came down, created this bottom line. We're going back up to test this peak. In all likelihood, we will fail, and we'll come down through the bottom. If it doesn't break through the bottom, if it breaks through these highs, that negates the bearish pattern. If you negate a bearish pattern, that's bullish. So that could be a best case scenario. However, I do think we need a sell-off. I think we need some relief so this market can move higher. So let's say we break through the bottom and we confirm that this is a top pattern. Where do we stop? Well, these areas of resistance on the way up, for example, this area right here, this top right here, that's significant. This top here is significant. This top is significant. These two lines are significant. This is significant here, significant support, the 50-day moving average. Here's a 200-day moving average, which is very significant, and it customarily holds. Doesn't always. We can see it didn't hold here. It held here, back here in August. The 38% back. That line, that's a Fibonacci retracement. I explained Fibonacci retracements about, I think it was 2 podcasts ago. So that's going to be a good support area, which happens to coincide with the 200-day moving average. So what do? Remember, I'm not prognosticating, but I need to know where I think the market is going to go in order to know how to modify and manage the portfolios properly. So what do you do here? You buy on dips if you have some cash. Whether you're fully invested or not, you want to make sure this is a momentum-based market. You want to make sure that you're in the strongest assets. So you want to be in the strongest asset classes, be it U.S. stocks, which is obviously out in front, international stocks, currencies, commodities, bonds, be in the strongest asset classes, be in the strongest sectors of the asset classes. What are the strongest U.S. sectors? We have technology, communications, financials, industrials are strong. Utilities are coming up good. So you want to focus in the strongest sectors and then grab the strongest assets of those sectors because that's what's going to weather the storm. Also, if you have laggards, if you've recognized laggards in your portfolio, you need to get those out. You need to put the stronger assets in. That's how you're going to ride this down. Also, if we have further gains from here, or if we hit my targets, 65 to 6,800, the targets that I've got off this chart, then if you're in the strongest assets, you're obviously going to go up the most. So that's how you want to manage your money. Be happy to do that for you. Just give me a call or contact me, email me, whatever, and let me know, and I'll look at your portfolio and see if it's positioned properly for these type of moves. Remember breadth. This is breadth of the New York Stock Exchange. You can use a lot of different measures of breadth. I've explained breadth over and over in previous podcasts. It's the underlying strength of the market. It's not price. It's how many stocks are participating in the up move. Breadth is waning. Breadth went up and broke new all-time highs. Now it's come down below those highs, and those highs are acting as pressure, as a resistance point. This is another reason to think that perhaps we've got this intermediate top. So let me know if you have any questions. You can contact me at 949-497-6366, scott@dahlcapitaladvisors.com. Go to my website, dahlcapitaladvisors.com. I hope this is helpful. I'll be looking forward to putting more up if I see changes or something that needs to be communicated. So thank you for watching.